Hi there, welcome to GrainTV. It's Friday, January 22nd. I'm Kevin McNew. We had a mixed day in grains. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn managed a 3 1/4 cent advance, closing around 370. Beans off 2, and wheat unchanged, mostly only gaining a half a cent a bushel. News today was pretty light. Early on, there was some news out of India buying South Korean corn. The weather in Argentina is starting to cause some concern. The hot, dry pattern is expected to continue for the next 7 days, which may cause some excessive drying. But after that 7-day period, the 8 to 14-day forecast looks to be a lot better. So it's not anything at this late stage of the year to get overly excited about, but it does seem to be helping at least support the corn and bean market. The other news out today was USDA's export sales report, and there we got a bit of fresh news from corn, where we actually exceeded expectations, beating the 1 million metric ton mark. And well above 600 to 900,000 metric tons that was expected. That was the first time in 6 weeks we've had corn exceed 1 million metric tons, but we're going to need a lot more of that to get caught up on USDA's pace. In soybeans, we were at the upper end, coming in at 985,000 metric tons, and wheat coming in at 362,000 metric tons. Let's take a look at the scorecard, and where we're really struggling is corn. If we look at year-to-date export sales versus the same period last year, we are 26%. That's more than a quarter of the market behind in this time of year compared to last year. Compare that to what USDA is looking for year on year. They're only looking for about an 8.8% drop in exports. So what that means is we've got to start picking up the pace. We need quite a bit of new export business in the latter half of this marketing year to reach USDA's forecast. Wheat also in a similar boat, although we're further into the marketing year with only about 4 months left. So here we're falling 13% behind the same time period last year. USDA only looking for about a 6% drop in exports. So these are potential negative drains on the grain market, because what it means is if we're not going to export the grain, then that's going to add to our carryout. I'm looking for USDA to have to eventually raise their corn carryout to over 2 billion bushels. Right now, we're only at 1.8. In the case of soybeans, we're doing much better, coming in at 9.2% below last year versus USDA at 8.3. So there's still quite a bit of room there to meet USDA's expectations. Let's take a look at soybeans in particular, because we talked about this yesterday, looking at the 4-hour bar chart. And what we talked about was the potential for a head and shoulders formation around this 4-hour bar chart. You can see the USDA report back early last week. We've since gone up to the head on this head and shoulders formation at 888. Today we made another run at the other shoulder, the right hand shoulder here, around the 886 range, but we quickly retreated and closed down towards the low end of the range. So watch that 871 mark. That's where the base of this neckline is forming. If we can penetrate below that, then that spells bad news for lower prices, probably going down to the 854 or a retest of the lows set back before the USDA report. So that's what you should be watching for in the coming weeks. It felt pretty weak today, although we didn't get much direction in the trade one way or the other. So watch tomorrow, or watch early next week to see where we're going to be trading for. I'm expecting that we'll probably start to retest that 871 mark on beans and probably the 364 mark on corn without any sort of major news over the weekend. That's all we got. Have a great weekend, and we'll see you on Monday on GrainTV.